SCHD just paid its third quarter dividend, and honestly, this one wasn't anything to write home about. To be fair, it did increase compared to the third quarter of last year, but only by about 3.5%. In this video, I'm going to walk you through how this new dividend stacks up, give you the complete picture of SCHD's dividend history, and share how I feel about SCHD moving forward. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please reinvest in that like button, subscribe if you haven't already, and drop me a comment below with anything that comes to mind. Quick mention, if you want even deeper research tools and portfolio tracking, check out the pinned comment below. You'll find a free trial to Seeking Alpha and Snowball Analytics. Both are fantastic, and this investing nerd uses them daily. You know what time it is. Let's grow. 2025 third quarter dividend. SCHD paid 26.04 cents per share, which is nearly flat compared to last quarter, up by a rounding error. But it did increase by about 3.5% from the third quarter last year, which with ETFs is what you want to compare it to. This didn't shatter any records, but the dividend snowball is still rolling forward. Since its inception, SCHD has delivered an 11.11 dividend growth rate, which puts it in a league of its own. Let's jump over to my screen now so I can show you how this new dividend fits into the bigger picture and how the real magic comes with the long-term dividend growth. All right, I hopped out on my Retire with SCHD spreadsheet that I maintain each quarter, and this looks like a lot of data. Don't be overwhelmed. We're gonna break it all down. Before we dive into the numbers, I will say, I've already recorded this video and I do these screen shares live and unscripted after. DGRO, VYM, VOO, and VGT all had negative quarter-over-quarter dividends. So for the overall market, dividends were really down this quarter. But so far from what I've seen, this 3.5 quarter-over-quarter dividend increase, SCHD is uniquely positive on it. So maybe I was a little too hard on this quarter. But anyway, you can see here's that 26 cents per share, and it just did beat last quarter's dividend, which is a little bit wild because historically quarter 2 and quarter 4 are usually the highest ones. If you look back year over year, 2 and 4 usually battle for the highest dividend of the year. So quarter 3 actually performed fairly well both last year and this year. So I would say this 3.5% comes on some solid performance at a higher level when we zoom out. Now what I have here are different columns, and you can ignore these shares. This is actually for a retirement scenario. We'll get into that in a minute. But really where we want to start is on these CAGRs. So on a year-over-year CAGR, taking the last 4 payments of SCHD over the 4 payments before that, it's up by nearly 6% here at 5.79. And then for our 3-year CAGR, it's up 7.77%. So these have fallen below that 10 or 11% historical CAGR rate of SCHD, but its peers have as well. When we zoom it out 5 years, we're still over 10% at 10.4. That's a great dividend growth rate for 5 years. And then it's up slightly higher over the last 10 years. 10.4%. Just imagine if you got a 10.4% raise at your job. Because remember, that's exactly what this is. Yield means nothing. Yield is a snapshot in time that has price in the formula, and we all know price is all over the map for stocks and ETFs. But this 10.4% is what your actual cash has grown at. That means your dividend payment received doubles per share every 7 years. And we'll get more into that here in a minute. And then its lifetime CAGR since inception sits at 11.11%. And I will point out, a lot of people are making videos. You have to remember when you do CAGR math, I'm using a rate of return formula that may be a little more complicated than some other ones out there, but you have to use those 0.25s for quarters. So every quarter needs to add 0.25 to the duration denominator. I've noticed a lot of people do not have correct numbers. They're over exaggerating the CAGR since inception, and it only catches up for them once per year. So be sure to use your 0.25, 0.5, 0.75, and then 1 as you do lifetime CAGR math. Just a little shout out to you nerds out there. And then again, it's up 3.5 quarter over quarter. So we do have positive growths on this dividend. It didn't wow us, but it did a solid job. But when we zoom out and take a breath, that's where SCHD works its magic. So this is my retire on SCHD. I have a video series that I run each year that go into more depth of this scenario, but I'll be high level here because we're just here for the quarterly update. I only add years when we have complete data. So at the beginning of 2026, I'll have 2025 in here, but these are all actuals. You can audit them. A lot of people don't believe what they see here. In this scenario, this couple retired at the end of 2012, so the beginning of 2013, and they dumped their money into SCHD, and 500,000 of their portfolio that I think was $1 million overall. The rest is in like VU and those kind of good holdings. But they put half into SCHD in this scenario, and it's a split adjusted $9.45 per share. And you can just see over the years, so these shares are just the amount that got it to 500,000. Don't worry about this weird odd number. And again, everything's split adjusted. But you can see how steadily SCHD grows its price over the years. And what that does that can be deceptive, and I actually don't have a column for it, but as this price goes from 945 to 27, it triples, the yield is being pulled down by that because price is in the denominator. So it's only, I say that in quotes, yielding 3 or 4% every year because of the appreciation compared to things like high yield savings accounts, money markets, bonds. People get enamored with 5%, but what they don't realize is SCHD actually yields 10, 20, 40% literally over the years as it piles up. So this is the dividend growth. This is what's averaged 11.11% over SCHD's lifetime. And this is the dividend per share per year. So one share of SCHD in 2012 cash flowed you a nice 27 cents. That same exact share, no reinvestments, just one single share in 2024 got you up to 99 cents. It nearly quadrupled. And by the way, in 2025, this is very likely going to be low ones. Right now it's at 1.04 when you pull the trailing 12. So it should be 1.05 or so. Don't quote me on that, but it will be higher. And you can see the year over year growth. Every single year SCHD has been around, it's grown its dividends. Never once in your history, regardless of what's going on in the crazy market, regardless of what price is doing, never once has it paid you less money per share than it did the year before. You're thinking, oh, big deal, you know, you're going up 11%, whatever. You forget about compounding in the rule of 72. The rule of 72 will show that you take 72 divided by your average CAGR, which we saw was 11.11. When you divide 72 by that CAGR, you get 6.5. That means your dividends double every 6.5 years. And if you're waving your BS flag, I used to be amazed how this added up as well. Without reinvesting, you only made one purchase and you spent the money every year and bought toys and had fun. You have gone $14,300 in 2012 with your dividends. Those same exact shares get $52,600. Guess what? These yields, the quote unquote yield that people get stuck on, that's a vanity metric, except for the day you make a purchasing decision, were about the same here. They were about the same here, here, and here. So whenever you hear someone say SCHD only yields 3.5, that is not true. And you can run portfolio visualizers to see how it adds up. I've done that against these numbers and they match to the dollar, by the way. Don't get enamored with 5% for bonds. It will crush your purchasing power over the years, because unlike this with the CAGR, 5% or 3% or 2%, whatever your cash can get you for safety, is only going up by that. There is no CAGR. It's set by the rates. Sometimes it goes up, sometimes it goes down. But it's not these blue chip companies that are always increasing their dividend. All I ask is that you be very careful when people talk about yield and how actually my high yield savings account is yielding 4.5%. It's beating your SCHD by a bunch. No, it is not. That's only the stuff you buy that day, my friends. That's why we call this investing over trading. And by the way, just as a little side piece, it's not the point of this video. This couple went from 500,000, again without investing a penny, not 1 cent. By the end of 2024, their shares were worth almost 1.5 million. And that's with getting nearly 400,000 of dividends that they got to blow on having fun in retirement without a worry. So they tripled their money, their value that they actually have, while also increasing their purchasing power to crush inflation and enjoy retirement. It's just a killer combo that is underrated because it never wows you on paper in any one year. So you'll read about all that negative sentiment that it's quote unquote not doing anything. And then the last thing about SCHD, just for the cherry on top, we have this fund overlap by weight with my favorite growth ETFs, mine and most people's frankly, and the market, VOO. So it's not like I'm handpicking weird stuff here. And you always want your dividend payers to counterbalance these for when the market changes and things crash. And as you can see here, SCHD has a 4% average weighted overlap with these great holdings. VYM is the second best of these four beasts that I track against each other at 18%. Over 4 times the overlap. And then DGRO and VIG, let's just say when tech crashes and the market changes, this is a counterbalance. This is not. VIG is basically VOO. It's a hybrid fund, low yield. And then you step up the line with the correlation. But SCHD has little correlation. Lately, that's been a bad thing with this energy ramp up in SCHD, and tariffs affect these blue chip companies more than they affect services, for example. Like the Microsofts of the world are less affected than companies that make physical goods. SCHD has really been hit hard, square in the nuts, frankly. And, that reflects in the price. We all know it's been ugly lately. But just stay the course, because when the market changes, and it does, we will see what happens. SCHD remains a core holding for this guy. But why is that? The bigger picture. Unless you've been living under a rock for the past 3 years, you know SCHD has been a total return disaster. This comes after it outperformed the S&P 500 over its first 11 years since inception. Sentiment is down, and for good reason. Tariffs and energy additions have derailed performance for this seasoned ETF. But honestly, I think this bodes well for new buyers of SCHD. Ignoring sentiment and our human emotions is one of the best ways to naturally buy low and sell high. On top of that, SCHD's valuation looks attractive today. Its portfolio trades at a lower PE ratio than the overall market, which could set up stronger forward returns for patient investors. And remember, SCHD has grown its dividend every single year since launch, even during this rough patch. And if you made it this far, you already saw how well that adds up when we let compounding do its thing. As for me, my portfolio is going to keep riding SCHD into the sunset. I'll be the old guy someday with all the toys because my purchasing power keeps smashing inflation. And speaking of wise investors that will have all the shiny toys, a huge shout out to Addy4830. I appreciate you joining the channel membership, and it's great to have you in this wonderful community. I appreciate you, and I appreciate all you members that have been here all along. You really do keep the fire burning for me in this stuff, and you're making these videos possible. And check out one of these 2 videos if you want to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you in the next one. Peace.